Hey everyone, it's Kenton Becker, American Pacific Mortgage. I'm here again with another weekly video update for you. Now, in this week's video tip, I want to rapid fire some quick questions and answers on kind of some common questions that I get asked in the homebuyer education class. I don't want this to be a long video, so let's get started with it. First question is how much home I can afford. Now, I've talked about this on recent videos, but in general, how you figure out how much home you can afford is by looking at your income and looking at your debts. So you can go up to about half of your monthly income for your total debts. So all you need to do is take your monthly income, divide that by 2 or 50%, whatever that number is. So let's say it's $7,000 a month income that you make. Well, divided by 2 is $3,500 per month. So you can allow up to $3,500 for monthly debts. Now, if you subtract out all the debts you already have, like your auto loan, credit cards, and student loans, let's say that's $500. Well, $3,500 minus $500, you're left with $3,000. That would mean that you could afford or you could handle a $3,000 monthly house payment to purchase a home. All right, question number 2 is how much down payment you need. I would say this, the down payment can be anywhere from 0 to as much as you want to do. And the reason why is because there's down payment assistance loans, there's VA, there's USDA. All of these options would basically be 0 down payment. But then there's minimum down payment options like 3% down on conventional, 3.5% down on FHA, 5% down, 10, 15, 20, as much as you would like to do from there on. So you have lots of options with the down payment. Again, anywhere from 0 to as much as you would like to do. Okay, the next question is going to be closing costs. How much are your closing costs typically going to be? Generally, your closing costs are going to be usually around 2 to 3% of the home price. So if you were buying, let's say, a $400,000 house, you'd probably be looking at closing costs somewhere between $8,000 to $12,000. Now, those closing costs can either be covered by you or by the seller. So you are able to negotiate with the seller to actually get them to cover the closing costs. If the seller agrees to cover your closing costs, and if you combine it with one of those 0 down or down payment assistance loans I was talking about, you could get into a home with very little, if any, money out of your pocket. Again, the closing costs are usually going to be around 2% to 3% of the home price. And either you need to cover that as the buyer or get the seller to cover that through negotiations. All right, the next question is, what documents are you going to need to purchase a home? Generally, the basic items that you're going to need to purchase a home is, number 1, filling out an application with the lender. That's kind of step number 1. But then the documents that you need to provide to your lender are all financial documents. So things like tax returns, W-2s or 1099s if you're self-employed, your bank statements, usually over the last 1 to 2 months, and your most recent pay stubs. And again, that's over the last month. So maybe 30 days worth of pay stubs, 2 months worth of bank statements, the last 2 years of W-2s, and the last 2 years of tax returns. And that pretty much covers all of the documents that your lender is going to need upfront to buy a house. So once you fill out the application, you provide those financial documents to your lender. They can complete the review and provide you with a pre-approval or a review of your application to let you know what you can be approved for. All right, another question that we get asked a lot is, hey, are there any prepayment penalties? Or another way to say this is, when can I refinance the loan? Because at the end of the day, you might be getting into a home today that has a slightly higher interest rate compared to what interest rates could be available a year from now, even 2 years from now, or beyond. It is a good question to ask, how soon can I refinance this, or am I going to pay any penalties in refinancing my loan? Really, for the most part, I would say 99% of loans out there are not going to have prepayment penalties. There are some loans that get into more the investor type loans for when you're not occupying the home, that may have some prepayment penalties, but you would be notified of that up front before doing that loan. So it's not like, hey, surprise, at closing, there's a prepayment penalty. It doesn't work like that. So in general, most loans do not have prepayment penalties right now, which technically means you're eligible to refinance that loan sometimes in as little as 6 months. Now, most banks do have kind of a buyback window that internally they have some financial obligations to within that 6 months. So most banks out of courtesy would ask you, hey, at least keep this loan for 6 months. Otherwise, they could get hit with some penalties. But outside of that, you're eligible to refinance that loan after 6 months or 6 monthly payments. In fact, most of my clients, after their 6 monthly payment, I'm probably going to contact them or at least look up their exact loan and see if there's any room for them to lower their rate or refinance to something better. Now, in refinancing, you do have to make sure that you have enough equity to be able to do so. So sometimes it doesn't work out in the whole 6 months because you haven't built up enough equity yet. But generally, I find that after a year or 2 years at the most, you have more than enough equity to be able to refinance that loan and potentially lower it to a better interest rate. We have no prepayment penalties on a lot of our stuff, and we're going to be looking at refinancing that loan as soon as possible to try to save you some money. All right, so there you go. Those were the rapid fire questions to provide you with some quick answers to probably the most common questions that I get in the homebuyer education classes. So again, I just wanted to provide a bunch of answers there. Hopefully that helped you. If I didn't answer one of the questions that you have, make sure to comment below in the video here. I'll make sure to answer your question. And as always, like and subscribe if you like these videos. We really appreciate it. And thanks so much for joining me again on this weekly tip. Have a great week, everyone.